So we got skyrocketing gas prices, stock market's dropping to recession levels, money's getting tighter, inflation's happening, our pets' heads are falling off. What? It's from Dumb and Dumber. You got to go back to the 90s for that one. Let's get out of the doom and gloom, folks. Let's be practical. Let's be practical. Let's be real. This morning we're going to check in with our financial expert on how to handle your savings, your retirement. Now, if you have a 401k at all, looking at it while things are falling can be quite scary. Looks like you're losing money fast. But if you're 3 to 5 years or more away from retirement, Kendall Can says don't panic, don't stop saving, even if it does feel like you're losing.
You don't want to time the bottom. You have to continue to make regular, predictable, consistent contributions to your account if you can afford to, outside of your cash savings, so you can capture these lower prices.
You hear what she said there? Lower prices. Yeah, when the stock market goes down, all that stock you're buying is cheaper, right? So you get more bang for your buck. And then in 3 to 5 years, if we come out of our bear market, hopefully things rebound and your retirement account could actually be even better off. Now, that's for the long term, folks, 3 to 5 years or more from retirement. In the next half hour, we're going to bring Kendall back. We're going to talk to her about the next group of folks, those who are actually pretty close to retirement. Could be a scary time if you're 2, 3 years or less away from that big day, but she does have some hope and some help for you too. Keitha?
I need Kendall's number, Lou. We got to talk offline. Appreciate that.
But how about those who don't have very long? You're 2, 3 years away or less from retirement. It is not all doom and gloom. She says just find a more conservative approach.
If you're retiring in less than that time frame, I would look at your future contributions and start making contributions to bonds, bond funds. Look at your allocations that your company offers. Stay away from equities, stay away from tech, specifically the NASDAQ, just bonds.
Very practical, very real advice. And you can find Kendall on Twitter and Instagram at kendall.can. She posts some pretty interesting financial advice. However, she acknowledges if you want to get a financial advisor, it can be expensive. Getting a pro costs money. If you're not at that point to pay for a professional, there are free resources. Financial Planning Association has some help online. In fact, wherever you do banking, you can actually go into the bank, brick and mortar, go in, forget about the online, and they have employees there who will help you out with your savings goals and plans as well. And they do it for free when you have an account with their bank. So think about that. And for all this information, we'll have all Kendall's stuff online, firstcoastnews.com.